The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Tuesday's market action, it was a bit quieter day overall, maybe even a little bit of a disappointing end to the session in some of the grain and oilseed contracts. I'm looking at soybeans in particular, kind of a tough way to close out the markets there. Have we moved past the USDA reports now? Are we getting back to some of the market fundamentals that we had before, like South American weather, et cetera, et cetera? Let's talk about this. Joining us for market analysis, Corey Bratlin with agmarket.net. Corey, good to have you back with us here on the show. And I guess, have you caught your breath after USDA report day Friday and continued strong trade we saw on Monday at least?
Yeah, we have. That was quite the shock there on Friday, like we talked. But, and then to follow it up on Monday, yesterday, we had a export sales announced to China on some soybeans, about 198,000 metric ton. Between that and, lately here, too, we've been seeing the funds been pretty active in the commodity market now. We're trying to figure out what's their sole purpose or what's driving them into getting long in these contracts on soybeans and corn. Corn, they built a nice healthy long position and such, but no, I mean, I think we still are continuing to see a little bit of dryness down in Argentina and South Brazil. I think now that the USDA report's behind us, that kind of sets our tone that where the market should be supported, which with the lowering of the carryouts on both corn and soybeans, we should stay somewhat supported. So yeah, we're back watching the current fundamentals, such as are we getting export sales, or what's the weather like in South America? And like I said yesterday, we had a sale of 198,000 metric ton of soybeans to China. We followed that up with another one here this morning. Yesterday, we had the funds kind of step in big buyers and having corn up 5-6 cents, beans up 26-28 cents. Today, we were pretty kind of subdued. We had a little run there about 9:30 here this morning where beans shot up 11-12 cents, but boy, at the end of the day here, down 5.5 or so on the day. This market just feels like maybe these funds have kind of run their course here for the short term. So.
Well, and you bring up the funds, and I'm glad you did. Let's kind of dive in there a little bit more. I know you guys at agmarket.net, you work a lot with your commercial folks on the RJ O'Brien side. I mean, so that's one piece of this too. You look there, you look at some of this big hedge fund money that's got these long positions. I mean, what are you hearing, I guess, throughout the trade right now as to why funds have these positions, long in corn and a little bit of a tenuous position, I'd say, on the soy side?
Yeah, and then the corn length kind of makes a lot of sense because of if they had a bias going forward that the global ending stocks getting tight, U.S. ending stocks getting tight, net. I mean, we are at the lowest level of global stocks since 2014. U.S. stocks down to 1.54 billion bushels, way off of earlier this spring or last spring and summer we were talking well over 2 billion carryouts. So we definitely gotten tighter. So funds did carry a big short position into last fall. Reverse that now, and as of yesterday, anyways, or as of the close of yesterday, last week, Tuesday, funds were like 253,000 contracts long. There are some speculations that since then, in the last week, we'll get an update from today through on Friday with an updated report. But the funds are kind of reported to be 340,000 contracts long. Now soybeans, kind of a head scratcher here. We kind of wondering if it isn't just a money flow coming out of stocks and stock market in kind of chasing these commodities a little bit in here. We still got plenty of supply globally, but if we may be looking at considerably less acres because the break-even scenario. I was just talking with a few customers today, and man, we need $10.50 cash soybeans, and that's just not out there for a lot of us when we factor in the basis.
Well, and thinking about basis, I mean, it felt like the last several days that started to weaken a bit. It started to widen out, and I wonder if part of that has been some farmer selling that's happened on this rally, or maybe it's just kind of that switch with the futures kind of taking the lead, and now basis is kind of taking the back burner, so to speak. What do you think, Corey?
Yeah, the farmer selling has really been pretty fast and furious. Last Friday, again on Monday, we've been hearing a lot of that, especially with our folks at John Stewart and Associates that we work with. We are hearing that the farmer have been very active selling this market, so which is good. They're at profitable positions, and so on. So yeah, and one thing I do like coming, I worked for a commercial elevator back in my first start in the ag industry 20 some years ago, and yeah, one thing we kind of watch, and one thing I want to point out is watch the spreads and watch the basis. Basis has been getting weaker. That's due to a lot of farmer selling. Spreads seem to be stalling out a little bit, where today, we saw the old crop, the March contracts not do as well as what the November and the beans and the December corn futures did. So we're kind of seeing maybe these spreads start to top out a little bit. So, the old saying is, kind of watch spreads and basis, and that's usually an indication that maybe the direction of our market. So I think, producers want to be a little bit disciplined in here and get some stuff locked up in here. We're kind of topping out here. We gotta, if this is a true bull market, we gotta feed this bull more than a little bit here and there. We gotta feed him daily. So
Very true. Very, very true. Well, and I look across here to the outside markets too, and the influence that dollar. We talked about that. So you got that piece as well. Crude oil down a bit on Tuesday. But then throw in here too all of the potential fireworks on the political front, and I guess I feel like that now we're past USDA's reports, and the market has absorbed this. As we look at what lies ahead, to me it feels like there's more headwinds than tailwinds, and it feels like a spot here where producers got to manage their risk, Corey.
we do, with the new administration coming in, talking a lot about potential tariffs, and that's what they like to do is talk about potential. What if they follow through? That's going to be two different things. But that's kind of, I think, maybe why we saw China buy some soybeans the last couple mornings. It's not because we're cheap, because this dollar index at 109.5, at 22, 24-month highs, it does not make us competitive by no means. South America is just kind of getting, Brazil is just starting to harvest a few bushels right now, and they're going to slowly get ramped up. So we're not the cheapest people on the block. So, I mean, I would think if they're really needing some soybeans, they would wait 30, 60 days and buy some from South America. So, but I just think, maybe China is buying that just in good faith, just to try to keep the tariff talk kind of as a minimum. But yeah, we're going to have a lot of headwinds coming here in the next 30 days, and when we get the new administration in and see how everything factors out.
I know in terms of South America, we still have the dryness concerns in Argentina and a little bit into southern Brazil. I know CONAB on Tuesday morning made a few marginal changes to soybean and corn production estimates. They raised the soybean crop estimate to 166.32 million metric tons, and it looked like the corn crop up to 119 or down to 119.55, so a slight lowering there. I guess you look at the South American picture overall, Corey, and some of those number updates. There's a lot of private estimates that are still very high. And what's your read on what's happening in South America, and how big of a driver is it in these markets now moving forward?
Yeah, that's helped, I think, add a little premium to this market, is that southern Brazil dry, Argentina been drier. We've built in earlier here in the last 60, 90 days, we built in them to have such a huge crop coming. And I think it's still going to be a record. Okay, I still feel pretty confident in that. But I think it's definitely come off a little bit. We are starting to see a few private analysts start to bring their number down a little bit. But, they were talking Brazil being, 172 to 175. It seems like now we seem to be gravitating more closer to that 170, 172 million metric ton soybean crop. So all in all, I think, that helped a little premium into this marketplace, but they still have got a very large crop coming. So as they get into harvest, they're going to be very competitive here, and it's going to be hard for us to continue to have much market share here. And that'll be the kind of key I'm going to be watching going forward, especially March, April, May timeframe, if we have much export market business share in the world here.
How about the wheat market trade? I just want to get a couple notes there. I know that's been super tough lately. Beyond, a dollar obviously at high levels not helping, but wheat's just been a tough go here really the last couple of months. Any notes for you here in this wheat trade?
Yeah, I think wheat's getting really close to a low here. When we look at the wheat to corn ratio, it's pretty close again. So I do think wheat could pop up a little bit, maybe corn come down. We did note that was it either early yesterday or else it was late last week. Korea come in and bought some feed wheat out of the U.S. So they're usually kind of a bottom bargain shoppers out here. So I think with them coming in the marketplace, I think it kind of does suggest that maybe this wheat's got a good bottom in here for the near term, and we could see wheat kind of gain on corn and maybe beans a little bit here in the short term. So.
Corey Bratlin with agmarket.net's our guest analyst here today on Market Talk. Corey, let's take a look at livestock here real quick as well. Cattle market been kind of mixed here futures wise this week. We found a few green numbers, mainly in feeder cattle on Tuesday. I think at one point live cattle hit a 3-session low in that Feb contract on Tuesday. But man, this cash market's been hot. It's almost feeling like futures are consolidating as we wait to see what cash trade is going to do this week. Is that your perception of the cattle market here early this week?
Yeah, you're spot on there. I mean, the cash market, I think the sellers are out asking for a little bit higher number. The buyers are being a little cautious because we're at such high levels in here, and I don't blame them. Can we support these higher prices? So far we've got a little bit lower number cattle yet, but yeah, you're right. And this cattle, the futures market's been a little bit choppy back and forth action. So they're just waiting to see what this cash does, what the next leg up. Hogs market has had a nice rebound here recently. We're starting to find a little foothold there finally after their big sell-off and the fun liquidation of their big long position. And then on the feeder cattle, I'm hearing the feeder cattle index might be pushing upwards of 280. So you got January feeders still on the board here for a couple more weeks, trading 274. They might you're seeing some goofy action where January feeders are really pushing up, where the deferreds are coming along, but they're at a pretty good discount. So I think there might be a little bit more upside in this January contract here on these feeders. But overall, live cattle demand is still pretty darn strong. But again, I think these buyers are just being a little bit cautious, just kind of pumping the brakes here, just to make sure that the demand is still staying with us.
Is there any concern for folks looking at feed needs here with grain prices going up a little bit, and we're kind of chopping around here in the proteins a little bit? I mean, you look at some of those feed margins, anything big stand out to you there?
Not really. I think most of the guys that I work with, anyways, on the cattle, they've been pretty disciplined there, and they're locking in their feed needs, they're locking in their hedges on the cattle, because when they go out and we're buying some of these calves and paying in excess of $2,000 for an animal, we got a lot of money laid out there. We don't want to risk too much in here. So I think most of that has been covered there. I'm sure there are always some out there that don't have them covered, but there's plenty of grain out there. I think the weaker basis suggests that there's plenty of corn out there. And the meal has been, on the hog side of things, the meal has been hanging around that $306, $307 a ton area. So there's plenty out there.
Definitely. Anything big for you in the outside markets? I know we had the producer price index out Tuesday morning. Crude oil a little bit weaker Tuesday, but still at some lofty levels. Anything in the macro markets you're watching here this week, Corey?
Yeah, crude oil seems to be kind of running into a little bit of headwinds here. We're in the last 3 weeks, we're up about $8-9 a barrel here. They seem to be kind of running into some resistance, some old highs here in this $77-78. So, and I can always like to watch crude oil because the funds like to play around in the crude oil market a lot. So, I mean, they've been active buying in the crude oil, kind of spilling into some other commodities. If they kind of start to pull back out of crude, we could maybe see the money flow maybe kind of slow up in the rest of our commodities as well.
All right, Corey, any final thoughts? Anything you would reiterate to producers here on the show today?
Yeah, just keep an eye on new crop prices. Corn, we broke through 450. We're knocking on the doors of 460 futures. If we do see this big increase in acres like everyone's talking, that's not a bad place. I think most of us can break in, get some break even prices at the current market there of the new crop. So beans still got a little work there, but like I say, always practice your risk management and give us a call. We'll be happy to visit with you.
Absolutely. And I know folks can find phone numbers and take a look at all of your guys' intel, sign up for your conference a few weeks from now in Nashville. They can do all that at agmarket.net, can't they, Corey?
You betcha. You sure can.
agmarket.net for more information. Corey Bradlin, always good to chat. Thanks for joining us here on Market Talk today. Have a great rest of the week. We'll talk to you again soon.
Sounds good. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.